Hey, welcome to this episode of InvestU. Today we're going to be doing an analysis of B&G Foods Incorporated, which is traded as ticker BGS. So let's do a quick overview of B&G Foods. The ticker is BGS. It's traded on the New York Stock Exchange. This analysis was performed on the 15th of March 2020. It has a market cap at the moment of $884 million. The stock price is presently trading at $13.81 per share, and there's 64 million shares outstanding. So I wanted to go through our investing rules here at InvestU. This is focused on value investing principles. So the first one is having a PE ratio of less than 25. We don't want to invest in stocks with large PE ratios because you're paying a lot more for the earnings than you should be, in my view. And really what this results in is low earnings per share, which should mean low stock growth over time. Now, I get that there are different factors here, momentum, interest in these stocks for the short term from various investors, but I would like to see stocks with low PE ratios. I want a market cap of greater than 500 million, so I want to invest in larger companies, not smaller companies. Current ratio of greater than 1.5. And what this means is, and this is especially important as we get into some challenging financial times, is the ability for the company to cover off its short-term debt obligations. I want a return on equity greater than 5%. So I want to see that the company is able to make money off of its investments and ultimately beat the cost of borrowing. I want a debt to equity of less than 50%. And so what we're looking for here is good book value and low debt relative to the book value for the company. We want consistent growth in the earnings per share, 10 years of consistent dividend payouts, dividends greater than 2%, and a good value for the stock. So the intrinsic value calculation is important here, and I want to see that this is greater than the stock price. And again, our approach is not to invest for the short term. I think this is incredibly important given the volatility in the markets today. It's important in bear markets, so this is something that we're looking at for consistent investments over time. So let's look into our key metrics for B&G Foods. The price right now is $13.81. We have a PE ratio of 11.80. Earnings per share of $1.17, which translates into about 8% per year. A nice dividend yield of 10% at the moment. And I find that the dividend yield really helps rationalize our investment behaviors as the market fluctuates. So as the price may drop, the dividend yield will go up, which really makes it more attractive to buy. But really, I'm locked in for the long term. So if I can buy at $13.81 and have a 10% dividend yield, I'm excited about that opportunity. The price to book is 146, which suggests a margin of safety of around 69%. Debt to equity is 2.58, which is higher than what we had suggested. So I am a little bit worried about this one, and I'm going to dig into this a little bit more later. Debt to assets of 0.60, return on equity of 19%, which is greater than our 5%, so we're good there. A current ratio of 347, which suggests it can cover off its short-term obligations, which is good in uncertain financial times. An EV over EBITDA of 8.06, a gram number of 2816, which suggests that the price is undervalued at this point in time. And it generally has a lower correlation to the S&P 500, though we have seen some dips of this stock as the S&P 500 has been declining. It does have lower correlation to tech stocks, so think Google and Apple. And surprisingly, given that it is one of its biggest customer, it does have a fairly low correlation to Walmart. Okay, so I wanted to do a bit of a dive into the dividends per share for this company to look at that 10-year history. So what I did was I went on Yahoo and I went to their historical data, and you can filter down by dividend payments. So I did that and looked at that on a monthly basis for basically the history of the entire stock, and I plotted it out here. So you can see that there is fairly consistent growth. One thing that I am slightly concerned with, though, is the dip that it had around 2008. And that was during the last stock market crash that we had, and they did cut dividends. So I am worried that maybe that's what they're doing or could be doing for the stock for the future. Though when I went to Walmart the other day and was walking around and I went to the frozen vegetable section, I did notice that a lot of the Green Giant stock was not there anymore. So I'm hopeful that over the coming quarters, and especially with people isolating themselves, perhaps they turn to B&G Foods products for non-perishables, and as people cook at home rather than going out to restaurants, hopefully that will translate into good earnings throughout these trying times. Okay, so we did an intrinsic value calculation for this stock. I'm assuming a growth rate of 10%. It's discounted at 10% and a growth rate in perpetuity of 2%. Using the 2019 free cash flow, I arrive at a figure of 61.66, which suggests that the price is really undervalued at this point in time. So let's look into the trends for how we got here. So looking at the free cash flow, we see there's some good growth over time, though there is some uncertainty, especially over the last few years. So this would be something I would be keeping my eye on over time with this company. From an enterprise value perspective, we see really good linear growth here. So over time, we're increasing in the book value. And I think this speaks to B&G Foods' behaviors from an acquisition perspective. So they have acquired quite a few companies over time. They have eliminated a few, and they've sold off a couple as you look through their annual report, but they are growing their enterprise value year over year. So strong revenue growth year over year. We see, since 2010, they are adhering to a linear model, and we expect that to continue. From a net income perspective, we're seeing it adheres to the linear trend, and we're seeing good growth year over year. So digging into the annual report, we see that, as mentioned previously, that B&G Foods has a pretty good track record for continued acquisitions. Recently, they've purchased Clabber Girl, McCann's, and Green Giant. Stockpiling of inventory recently, so frozen and shelf-stable products. So this is really good for especially the times that we're in right now where their stock is flying off the shelves. We have increased utilizations of products recently, as mentioned, and profit increases for Green Giant, shelf-stable foods, Maple Grove Farms, and Mrs. Dash. So corporate overview from a negative perspective, there are some profitability risks here with this company as it does participate in a fairly competitive industry. There are some customer risks here with Walmart accounting for 25% of their revenue. And there are private label risks. So there's no-name frozen food brands that are out there that really compete for a market share with Green Giant. They're vulnerable to decreases in the supply and price of raw materials, so packaging-related concerns. There's transportation-related concerns, price risk with respect to changing weather conditions, and changing in commodity prices. So I think we've seen some benefits in the energy sector, which may help the transportation costs for B&G Foods maybe over the next year or so. But the changing weather conditions is something that could be a pattern that we need to monitor because droughts and dry summers really impact the farming that goes into this product. There's a product recall associated risks, and they have seen some decrease in sales with Green Giant frozen food, Back to Nature, and Cream of Wheat, and a net decrease in sales last year of 1.4%. So getting back to the intrinsic value, again with a growth rate of 10%, discounted at 10%, and a growth rate in perpetuity of 2%. Using the 2019 free cash flow, we arrive at 61.66 per share as being the intrinsic value. The book value per share is $12.69, which suggests we have great coverage to the stock price, which is trading around $13.61 right now. So the margin of safety at the moment is tremendous. So all in all, this is a stock that we do have in our portfolio. We expect to see continued growth for B&G Foods over time. And as mentioned, the trying times we have in the market, I would suggest would be positive for the outlook for revenue for this company. Thanks for tuning into this episode of InvestU. We hope you click subscribe below and tune into our future analysis of stocks.